Welcome to the Growth Plus Exit podcast, where owners of privately held middle market companies talk about founding, scaling, and exiting their businesses successfully. Learn how to maximize and monetize your business on your own terms. Let's get started.
Hello, I'm Heather Bennett, a managing director for Newport LLC and your host for the Growth Plus Exit podcast. We feature middle market owners and experts talking about founding, growing, scaling, and exiting their businesses on their own terms. Past guests have included Kathleen Purley, John Fairclough, and Matt Vukoff. To learn more about these and all of our other amazing guests, listen to their episodes on Spotify, Apple, Audible, and all of the platforms the Growth Plus Exit podcast can be found on. This episode is brought to you by Newport LLC, a team of seasoned executives helping CEOs of privately held companies grow, de-risk, and exit their businesses successfully. Newport LLC is a winner of the prestigious Inc. magazine Power Partner Award, a list of elite B2B companies from across the globe. To see the entire list, go to inc.com/Power Partner Awards. To learn more about Newport, visit us at newportllc.com or, of course, find us on LinkedIn. Before introducing today's guests, I would like to thank the Private Directors Association for introducing us. We actually met at last year's PRISM, which is the national conference. Today's guest is Scott Ryan. Scott is a growth-focused executive and board director with experience driving margin expansion, operational excellence, and ESG-aligned innovation across technology and sustainable sectors. He is the CEO and founder of Investature, a B2B sustainable finance platform. Having spent decades of impact investing experience, he earned the Whale Tank Prize, a climate-based fellowship. His work centers on strategic growth, mission-driven partnerships, and advancing environmental and social impact initiatives. Scott, welcome to the show.
Good morning, Heather. Thanks for inviting me.
Oh, I'm so glad you're here. So let's get right into it. So we had talked earlier about this being your first entrepreneurial venture. How did this get started?
Yeah, it's I kind of backed into it, right? So I've been an entrepreneur at large organizations like Accenture, Bank of America, and Salesforce, launching new products, launching into new markets, but I've never been an entrepreneur. And 3 years ago, I decided that at this point in my career, I actually want to only work in impact. One of my favorite causes is environmentalism. It's been a cause since I was a teenager, but I've never had it as really part of my day job. And so I was on this journey seeking out like, hey, what are the best environmental impact oriented companies where my skill set in fintech innovation and impact and like user experience and AI could be relevant to like scale impact on the environmental transition. And as I was doing that, hyper networking, applying to roles, meeting with like informational interviews, I also did this training program, which is called the Climate-Based Fellowship. And in this fellowship, there's a track that's their capstone track. So over 12 weeks, people can say, hey, I've got an idea for a research project, a company, a nonprofit. And you compete, but in a collegial way against all the other members. And so when I did it, there was about 120, 150 entrants. And over the 12 weeks, I wound up being the winner. I'm like, oh, maybe I could be an entrepreneur instead of being an innovator within an existing company. And so 2 summers ago in 2024, after winning that Whale Tank Prize, I decided to launch a company and see how I could do.
That's amazing. And I do feel like those capstone projects are launching pads for so many companies or big changes in careers. So I'm excited to hear that you did that. And it was a good idea, clearly. So let's talk about growing and starting a company. Money, people, what did you do first? What did you need to do first?
Yeah, so it's funny. I think anytime I've been in an entrepreneurial concept and then an entrepreneurial concept, it's always about the idea, right? And then what is your revenue model for the idea and what unforeseen need or foreseen need is it filling? Right. And so how that comes with founders, every founder has a different point of inspiration. And then how do you get your point of inspiration into a business? right? And so the capstone project at least helped me figure out the point of inspiration and is it a relevant business? And for me, just to go back to the origin story, what I wanted to do is close what's called the climate finance gap. So think of the world has a certain amount of money needed to be invested in climate solutions like regenerative agriculture or recycling and reuse or reforestation and coral reef preservation. Right, that amount of money is about $10 trillion a year, and if that money is spent, then all the climate solutions are scaled. Right, just like solar energy, battery storage, electric vehicles are basically scaled globally right now. It's just now market penetration. They're all economically viable or even a better economic alternative to the legacy. So all the solutions, you need that amount of money. Most people don't know that that amount of money is just 1% of the world's balance sheet. Right, $10 trillion sounds like a lot, but in the context of it's a global problem and it's only 1% of the world's money, catalyzing 1% of the world's money to solve a problem isn't hard. Right, like when World War II happened, 20% of the world's money was catalyzed to solve World War II. Right, when there was a hole in the ozone layer that got solved in 2 years. Right, so just having the money and the will, but people knowing it is the problem to solve. And so I wanted to close that climate finance gap and then figure out how. And so what I targeted was a pool of capital, about $40 trillion, that is unintentionally actually fighting against climate transition, right? And it's money that people don't think about a lot, right? And you're taught to not think about it. And so that pool of money is defined contribution plans. In the US, that's known as a 401k or a 403b, but those same plans exist in countries like Australia, United Kingdom, Canada, the Netherlands, as well as individuals' personal banking around the world. Most people are taught to set it and forget it in investing in defined contribution plans and never think about their investment allocation, or if they do, they think about it once every 10 years, right? And then banking, the average global citizen has the same bank account for 20 years. You're not being intentional about who you're banking with, right? And that's $40 trillion. That's 4 times more money than is needed to close the climate finance gap. And all of that $40 trillion is mostly held by Americans and British citizens, and it's mostly unintentionally destroying the climate at a 20% clip. Because it's that money that's held in your bank where you're not thinking about the investment allocation is 20% funding fossil fuels, dirty mining, and dirty manufacturing, and not because people are doing that intentionally. It's because they're never taught to think about it. And so what we do is we educate. We then help people to act with here's the awareness, but 2, here's an alternative banking investment that's actually better for still equal or better financial return. Because you're basically being intentional about money that you've not been intentional about, even for pure financial gain, yet alone its impact orientation, right? And so we're trying to teach 100 million people to be financially intentional to catalyze $40 trillion of money to either invest in climate and environmental transition solutions or divest from problems where that money has just been sitting like a zombie pool of money underneath an iceberg, right? And then by more people that learn how to move their banking, which takes 2 hours, be more intentional about their investment allocation and see the impact benefits and the mental health benefits, that catalyzes and movement builds change within employers and amongst communities.
Okay, so what's good about what you just said is it really does explain the purpose of Investature and why it exists. So now that we know what you're trying to do, how do you do that?
Yeah.
Like, who did you need to bring on, or what type of capital did you need to raise in order to start the engine going?
Yeah, so the timing always matters, right, for every startup. And so the origin story I just told you was really an impact origin story. You could be like, why are you a for-profit or a nonprofit, right? Right. I've always believed that the way to accelerate change in the world is free markets and through business at faster pace, right? And I've always worked in for-profit, but I believe that businesses can drive the most impact around the world. So one, knowing it was for-profit. The timing when we launched, and we're a US-centric company, but team members around the world, at small capacity, about 8 people, was right at the end of 2024, where investments in things that were climate positive in the US were starting to slow down. And then at the beginning of 2025, were being attacked by government officials. So the funding environment, right, completely changed, where our story was the origin story of trying to help the environmental transition. And so from a funding standpoint, it was bootstrapped, right? But with the intention of having outside capital pretty quickly from pools of venture capitalists and angels that love investing in something that's going to move the needle even further on global environmental transition in all regions of the world, but in this case, where I'm US centered. And the second is still any early stage company, how do you find talent, right? And how do you find the right governance structure, right? And so talent, when bootstrapped, has to be people willing to take a risk, right? But have experience selling in B2B, have experience doing something where you're entering a new market versus we're not doing cheaper, better, faster, right? And so finding and retaining talent has always been a struggle from day one, because we didn't have the balance sheet to have traditional incentive models, right? There's one is like, hey, do you want to be in a startup? 2, do you want to be in a startup that's doing both market development and business development? And 3, where the incentive model is really incentive laden on commissions and equity, but not traditional cash and benefits. So from the talent pool, the one thing saving grace for the organization and why we're still growing today is that our board members, though, are extraordinary, and they've been with us since the beginning. And so we have people who were pre-IPO employee number 20 at Salesforce, someone who launched a retirement catalyzing tech platform called Alto IRA to get private investments in that. We have a woman who curates Fortune 500 boards and educates them. We have people who've worked with leading Fortune 500 companies for 30 years, giving them like C-suite consulting advice. So we have I've been fairly successful in my pre-entrepreneurial career. Every board member, I'd say, is like 2 notches above my level of success. And so we've had that foundation of network and how to do things right. And I've always leaned on my board in a true board capacity to meet with everybody biweekly with intent, convene the board every 3 to 4 months, and actually leverage their expertise and also the cross-board member dialogue for problems we're facing. That's been the one stable thing that's been a saving grace as we've navigated changing externalities as well as pivots on business strategy.
So when you created the board, because most companies, especially startups, don't get a board until they have to, basically. They're at the point where they cannot get any more money from series whatever until they have a functional board. And it sounds like you went in with the intention of having a board right away, even at the bootstrap level. What drove you to do that? And then how did you get these really motivational and inspirational people and smart to be a part of the board?
Yeah. So I realized early on that I've never been an entrepreneur, right? And then I've also never dedicated my life in sustainability. And I've never been the person who was selling the solution in greenfield, right? I've often been in like organic growth, right? Meaning growing an existing footprint, a little bit of greenfield in an existing market, doing it cheaper, better, faster, or like, semi-developed backbone of a global brand name. And so I knew I was going to hit problems that I have no experience with, and using Claude or something else to tell me how to do it's not going to be enough, right? And so I just knew I was going to have struggles that I couldn't foresee. And so then I knew I wanted a strong foundation. And then the second thing is part of it happened organically. So of my 7 board members, 3 of them I've known for more than 10 years, right? And then 4 of them just for 2, right? And as I was doing hyper networking, telling people like, hey, I'm doing this career change, I don't know what it's going to look like yet. I was meeting dozens of new people per week for like a 6-month period. They were most people I talked to. I'm like, here's what I'm thinking about doing. Who should I meet? Like, I'm inspired to do something. And as I was shaping it, they're like, I want to be on board with you. This sounds exciting, right? Let me be involved, but at the capacity that they had the capacity to be involved in, which was like an hour a week, right? And it's like, great, you've been a mentor in my career and personal life, and some of them are friends where I've been a mentor of theirs in different parts. But they actually like said, sign me up. And then we talked about what are we missing from a skill set that will be critical for the company. And then I went out and I started asking people, who do you know that has this skill set? And then would be a personality fit for the personality of the board that I have. And then the last thing is that it's my company it's my job for the company to succeed. It's my job to help keep the culture, but it's also my job to make it worth the board members' time. And so my promise to every board member was we will never have a rubber stamp meeting, right? Every meeting will be, say, 2 hours long when it's all of you convened. We'll have a 40-minute state of business and then 2 strategic questions that are going to be active dialogue where you've got options, a recommendation, but not sure whether you guys will agree, right? And so, my promise is that you will be engaged and use your brain. You won't be yawning during any of these meetings. And I feel I've kept that promise, and then I haven't had any board member leave where they could have easily been like, hey, you haven't been as successful as we thought you would be when we started in the summer and fall of 2024, right? But externalities change in the US market, and we've also had to change our business case story over time and then our solutions over time, but all still trying to see the same impact goal in a for-profit company.
Yeah, these are such really important, lessons learned on the job. One, the self-awareness to realize you don't know what you don't know. And that is true for every person in business. You don't know what you don't know. And so the idea of it's so forward thinking to start a board that early in a company, but also the way you've set it up is, doing the hard work of creating a board matrices, deciding what talents, skills, experience that you need to have on that board in order to round it out, asking those tough questions. And then, I sit on boards and chair boards, and it's really that respect that you have for the board members to not waste their time and to make sure that you utilize their valuable time in the best way possible. That's when we talk about employee engagement. What about board engagement? And thinking about how to keep that board motivated to do the best it can for the company. So a lot of really good lessons learned about starting a company and doing it in a way that really is de-risking a lot that can go wrong. So very impressive. So where you're only a few years in. So is this the point where you start thinking about the company? What triggers or flags are you looking for to say, okay, what we've got is working and successful? What are you looking for in the future to let you know that what you're doing is working?
Yeah, so as every entrepreneur knows and every investor knows, the only thing that matters is traction. Right? Traction in sales is the proof of your product market fit, right? Not good conversations, not having people that support you, but traction. And so we have not yet hit our hockey stick moment, right? But we're fully aware of we need to, and we're fully constantly changing our go-to-market approach or our talent or our story, right? To hit that hockey stick moment, because each time we make a mistake, we learn from it and we don't stay fixated on, we doing the same thing we were doing before, right? But every company still has the same founding goal. And so the biggest thing I would say that we've changed to just jump from 2024 to now is what is our value proposition to the market, right? And from a profitability standpoint, right? And then the way we're doing it, the way we're achieving those sustainability goals is actually more related to what is our profitability value proposition to the market. And so in the US market alone, our value proposition, like to a venture capitalist, is that employers are spending about $100 billion a year on retirement and financial wellness benefits that do almost nothing to attract and retain talent. So we're like, hey, there's $100 billion being burned, right? Just money being thrown out the door by the CFOs of all these companies. We've got a solution to actually make that money actually attract and retain talent and drive your profitability. even amidst all of the noise around the human capital shift that's going to happen with sustainable AI, that's a shift that will adjust to in like 2-3 years, and then you attract and retaining talent is still going to be relevant, right? Like retention metrics and the unemployment rate is still between 4% and 5%. So everybody wants to attract or retain the right talent, and tenure is now at like 2.5 years per employee versus 5 years per employee 10 years ago versus 15 years per employee 20 years ago. So the ability to retain talent that's in the door and not waste recruiting costs again is highly important. And so we have an employee experience lever to actually engage with your financial wellness and retirement benefits, that you'll actually care as an employee, increase your morale and wellness, and so perform better, right? And actually engage in it instead of, in the US, the average engagement level of their current 401k plan, 403b plan, financial wellness benefits. It's about 20 to 30 minutes a year. And it's 6% of the fully loaded cost of the employee base. Now, I don't know how good everyone listening is at math, but 30 minutes over a 2,000 hour year work year, that's a poor return on investment on engagement on something, right? And so one, we're like, help us just bet you be profitable on a thing that we call like below the iceberg, right? The spend on financial education and retirement benefits in the US hasn't changed in 30 years. If you look at DOL statistics, Department of Labor, it's been 5 to 7% per year, 30 straight years. No one's thinking about how to use it as a lever for opportunity, right? And so we're saying, hey, that's a lever for opportunity and revenue growth or profitability growth, in addition to its wasted money as a risk, right? And then the second, and that's been our main pivot, is like we lead with that. And then like, by the way, how do we get employees to engage is 2 ways. Hyper-personalized engagement that's both digital and multi-channel. And second, it's teaching something about that their money can be their greatest impact for the causes they care about, and not just charitable giving. And we lead education sessions with 1 stat. No matter how sustainability minded you are as a person, and every person is different on the spectrum, right? That if you care an inch, an inkling, right, is that your greatest way to help the environment, if your household is worth more than $75,000, is to be intentional about your banking and investing. And every multiple above $75,000 that you're more intentional about your banking and investing, the more impactful you will be. It's not reading packaging. It's not the car you drive. It's not your energy use. All those are good things, but your most impactful lever is just being intentional about your bank and your investing. And guess what? That takes a few hours to do per year. And then your money will be both earning you money and being impactful while you sleep. Versus reading the packaging on goods. Doing recycling is a few hours per week, right? The amount of effort for the payback is huge. And so we try to educate executives at the employers that we sell to, and then their employee base, to go from education to action to catalyzed and like wellness.
Excellent. So many questions. We'll talk about AI a little bit later because I have a few questions in that area. But so what is your long-term vision for the company? What's the impact you hope to have with Investature?
Yeah, so I'll go back to just pure financial success, right? Because I think I've been tilting on the impact that motivated the company, but not just the pure financial success, right? Because not everybody who's listening is a sustainability related professional, right? So the company, from a revenue standpoint, we want to get a 1% market share of that $100 billion within 5 years, right? And we have a movement building catalytic growth path that we forecast is feasible, but we haven't hit that S-curve or hockey stick moment to have the triple, double, double, right, happen yet, which is the typical growth path of a tech company on a year-over-year basis, right? But we think we can get 1% market share once we hit the start of the hockey stick over 5 years, right? And that's $100 million annual revenue through tech, bolstered by advisory services. So from a growth path, that's our goal, right? And then our impact goal is to catalyze $40 trillion amongst 100 million individuals through employer education. And then for those employers to drive their profitability up by 2% from what they're currently spending, not net new spend, but currently spending on either retirement or financial education benefits around the world, because it's a multinational solution, as well as money that they may, to achieve environmental goals, hard dollars they may be paying for offsets that they can use our solution, which is called, it's like a financed emissions reduction solution, as an inset return, where they then have cost avoidance for having to spend carbon offset money, including the hyperscalers who are doing it voluntarily, right? Because all eyes are on the hyperscalers for the amazing innovation they're doing, but also the risks that can be managed, right, around data center growth, right? And so they're doing a lot of offsets where they could actually do insets, and so not pay those hard dollars, but still have the same net zero pathway.
It's actually a very interesting use of your platform and what you're proposing, because that is a very real looming threat that's already occurring. Okay, interesting. So tell me about some of your, like, the turning points or your proudest moments so far while building. I know you're right in the early ages or the early stages of your company, but what are some of those maybe turning points that you didn't expect or you were very proud to be able to get through?
Yeah, I'll give maybe two proudest moments, one pure business and one personal, right? So every business, you have to be customer centric, right? And the first time I got an inbound referral from one of the 25 customers that we've already delivered solutions to, I was like, wow, all right, we're starting to get inbound versus everything else was we had to hustle, right, to get those clients. I was like, we're getting referrals now. That's a good sign. We're doing the right thing for at least one of our customers, hopefully more. Right? But getting the first inbound referral, which was about 5-6 months ago, that was great. And then we're figuring out how to earn more of those as well as nudge for more of those, right? But that was the first like pure sense from a business, and it was a meaningful referral. Right? It wasn't like, oh, this is my buddy that runs, like, our target market is companies you've heard of or universities you've heard of. We sell into higher education institutions. Some of the ones that are on our public website are like Arizona State and Bucknell. We sell into technology companies like Palo Alto Networks, right? Like, you've heard of all of these, right? And then we sell into management consultancies, right? Those are the three main sectors that are in the center of our bullseye. And so getting a referral from another name that most people have heard of and like a decision maker at those organizations, that was great. On the personal standpoint, I'm new to the sustainability space as a business professional. I've been on the advisory board for a nonprofit that's called the Natural Resource Defense Council for 10 years. Right? They're a huge nonprofit in the US that really is like a more litigation focused and then policy focused. And then I just joined the advisory board for the Environmental Defense Fund, right? Because they do collaboration, they do like healthy partnerships with the business community, right? But in my professional life, I had never had a reputation for being a sustainability professional. And so I had to build a reputation. And so I had all these people like, I want to be like that speaker and this other speaker, right? And so one of the people that was an early person I looked up to is a gentleman named Andy Behar. He runs a nonprofit out of Berkeley, California, or Bay Area, California, for the global audience, called As You Sow. And they help individuals remember that their proxy voting rights and shareholder resolutions are like a part of owning stock, right? Like, if you go back to when stock started, it was actually about being an owner and then financial return too. But the average psyche over the last 100 years has been profit, like financial return. And the ownership part of owning stocks, most individuals or even institutional owners have forgotten about. They've only thought about the return. And so he teaches people and cause related, right? Related to climate causes or gun control causes or gender equity causes. How to have, when you're holding stock, how to be either shareholder resolution or to vote. He's been doing that for decades. And then he also talks about the material impact of your retirement plans, like education, but from a nonprofit lens of just building awareness and giving people a resolution to act on. And I was like, he's a genius, right? I hope someday I can like talk to him and like shake his hands and recognize me in a crowd. And that was 2 years ago. He and I have now co-paneled together as peers twice, right? And so having someone who was a hero in this space suddenly be and he's still more accomplished than me in terms of tenure, but like being viewed as a peer, right? That just felt great personally. It means I'm doing something right to be standing on the stage as a co-panelist with someone who was like a hero of mine just 2 years ago, and he's still a hero today, right? But I'm doing something right.
That's amazing. Okay, so we're talking about heroes. Let's talk about mentors. Who are some of your mentors, and what have you learned from them?
Yeah. So the one thing so I come from a household of psychologists, right? And so I think that might explain a lot, as my kids would say, or my friends would say. But it also makes you very open to being vulnerable. And I think when you're vulnerable and honest, you can find a lot of mentors because there's an authenticity in the conversations you have with just people in your life, whether they're business, personal, athletic, what have you. And so I think I'm nowhere near perfect, but I've always had just a comfort with authenticity, regardless of the context. And so I feel like I have a lot of mentors, but also mentor a lot of people. And it's more just about picking time, like when is the right moment for that mentorship. So one that stands out, and it was actually, Heather, you and I, we were like in our pre-call, right? We were saying, hey, like here's one of the things that a lot of founders struggle with is that it's lonely at the top. And so I wanted to meet more people that had successfully ran a business in the impact space. And so one person I met is a gentleman named Roberto Marquez. Roberto Marquez is currently on the board of directors for companies like Alcoa and Cisco. But prior to that, he was the CEO of a company called Natura, which is a Brazilian headquartered but global like cosmetics and luxury goods company. And I had the pleasure of being introduced to him. And in my second meeting with him, we were like having breakfast, and I was like, all right, I want to like learn what I don't know. Right? I was like, all right, I've never been a successful CEO. I've never been a CEO before, yet alone a successful one in the impact space. And he said, Scott, the one thing you need to know, and this is the hard truth, is that it's lonely at the top. And because in my previous life, I've run divisions or departments or large territories, managed hundreds of people, but that's different from being at the top. Right? And he said, no matter how much you don't want to believe it, just accept it and move on. Right? And that was just getting pointed, authentic, crisp advice when someone has that background, but also the way he said it was like that burned into my memory instantaneously, right? Where there's so much other advice you might get from mentors, like, oh, that's nice. And like you forget about it a week later. Having the mentor at the right moment with the right background helps burn it into your memory, and it becomes a habit that you're aware of right away versus something that might go in one ear and out the other, or like be fuzzy in your brain. And that was probably one of my biggest mentoring moments amongst a lot of them.
That's amazing. And yes, very, very true. Very good knowledge shared. So a little bit more of a personal question. So, you mentioned your background a little bit. So where are you from? What was it like growing up? And what about those years, growing up, have you brought to your current business?
Yeah. So just geographically, I've mostly lived in I call it the orbit of New York City, not because like I've got a huge New Yorker ego, but just it's easier to describe Long Island, Manhattan, Brooklyn, New Jersey as the orbit of New York City. But so I've always lived in this area and then always felt like a global citizen, right? And so I've traveled to more than 50 countries. I've been to 48 states, but geographically always in the orbit of New York City, but I always feel like I'm just part of the world or part of the country. The traits, though, relevant to my entrepreneurship, right, is that there's been two things that have always been important to me. One is the environment, and the second is money, right? And the reasons for the environment, like when I was a teenager, right, and I was like featured in our local paper for like a littering campaign, right? But as a teenager, like, oh, like don't litter, don't pour oil on stuff, right? It's very basic thinking, at least when I was a teenager. Now, some teenagers are more evolved in their thinking of what being pro-environment means than they were, decades ago when I was a teenager. But the second is that I always wanted my own money, and I wanted my money to be multiplying while I sleep. And so I've always believed in financial returns, in banking and investing, like never under the mattress, always have money. But the reason for me to have money and then have your money work for you is it gives you choice in life, right? Like I'm sure there is subconscious greed, right? And having like something like that. But it's really for me at my core is the Boy Scout part is if you're a family, a country, a company, a person, money is mostly gives you choice, right? Now you'd have to then choose it like, hey, do I want to just get more money for more money? Or do I want to choose that money to have other impacts on the world? But if you don't have it, you don't have choice. And so those two traits guided most of my professional career, right? And the environmental side was always my main interest, but also it had a little bit of like, always be ethical, right? And like growing up in a house of psychologists and just having good mentors throughout life, like always be ethical. And then ethical can mean a lot of things, but ethical is important all the time. So always be honest and ethical. Make money, help your people around you make money, and then figure out how you can help the environment when the time is right and with the skills that you have. And so then my aha moment was about 3 years ago that I could combine my knowledge of the wealth and asset management and capital market space, my knowledge of scaling technology, either at like software companies like Salesforce or being like the front office technology leader for Morgan Stanley Wealth Management, right? To environmental impact. I learned how to connect the dots, right? And that's like how that's the common thread of all of it. And then I've always known how to do something that someone else wasn't doing before. And I probably bat, 500, right? So I've done maybe a dozen entrepreneurial things, and 4 were great successes, 4 were mediocre successes, and 4 failed miserably, right? But always not afraid to try something new.
That's awesome. Very cool. So, being an entrepreneur at this stage, when you're, like you said, at the bottom of the hockey stick, you're just about to launch up. Um, how do you keep your energy up? What are some of your daily rituals to help you keep motivated, focused, energized, especially if you're talking to all of those board directors every 2 weeks?
Yeah. So the good thing is like the relationship I have with my board is both personal and professional. So there's like a mix of like heat and expectations and a mixture of like, let's just laugh about something and tell a personal story. So it's good to have it be healthy relationships, but also like respect their business intelligence. But also when they want to just vent about their own lives or share a success, that's what we spend time on, because building that trust is the most important foundation in every working relationship, right? And so sometimes it's just a psychological conversation. But you have to know yourself, right? So I'm 51 now, right? And, I'm still trying to figure out how to fully know myself, but I've definitely had enough time to mostly know myself of what I need to calm down when I'm anxious or I've lost my temper or I've done something that is not my best self, right? And for me, it's things like play basketball and play tennis, right? Or it's watch a movie. Like I'm a sci-fi nerd, and I also like, this is a weird combo, I like sci-fi things and then I like musicals. Right? And so like a Moulin Rouge or Les Mis or something like that, or I like the Dune series and like Star Wars, right? Or everything Christopher Nolan has done. And so I'll just like watch one of those things by myself with a beer and like a tub of ice cream, and you're like, all right, that was consoling, right? Or I'll go play basketball or go for a long walk, right? Or just make sure, you know what, this is a rough day. It's 3 p.m. I'm going to take a nap. I just need to do something because I know that if I'm not mentally my best, everything else is a waste of time. And so just knowing what you need to do to like be your mental and emotional best. And whenever you need to do something to fix it, focus on that first versus pressing through not being your best.
Absolutely. I describe that as a toolkit when I'm working with executives and CEOs. I'm like, what do you have in your toolkit when you need to recharge. We talk about like refueling your tank and making sure you're, like you said, to bring your best self to everything you're doing, you have to have fuel in the tank. And if you don't, you can't.
Oh, I
So
must be,
trying to do that.
I'm shameful that I didn't say this. Spending time with my family and friends, right? Like the ones
Yes.
that love you unconditionally. I probably should have led with that because that's what I think. That's who's most important to me. But I'm on a business podcast. I wasn't
Okay,
thinking
so
about
the
that at
environment, money, then family.
the moment. Spending quality time with family and friends. And no one's like standing behind me that said, remember, what about us?
Yes. It's always that Academy Award moment where you're like, who are you supposed to be thanking first? There's a reason why they bring up the card is because you just go.
Yeah.
Um, but yes, absolutely. And I find that's incredibly important too, because if you can't be your best self to the people who are most important to you, you're definitely not going to be your best self to everyone else on the list, employees, board directors, ideal prospects, referral partners, like all the people that you need to make a business run successfully. So I love that idea of taking stock of where you're at and what you need in order to move forward. Fantastic. Are there any questions you wished I would have asked that I didn't get to yet?
Um, that's a great question. I think one of the ones that I'm still trying to figure out myself that is, part of the format of the podcast is the exit part, right? And how I think about the exit, but also how I can learn to think about the exit, right? That's the one around that, right? And of course, if, I have to help promote my business. So, what's the best way to get in touch with Investature? Which I'll answer that one now. But I'm curious about the exit part. Is investature.com the website? Come there, fill out our contact us form, or follow us on our LinkedIn page, or follow me, Scott William Ryan on LinkedIn. And then apologize for our website not being perfect. We are a startup, but we're doing our best. But on the exit side, maybe what questions do you usually ask on the exit side so that I can handle it? See if I can handle it.
Yeah, absolutely. So the most important thing is understanding that an exit for every company and every business owner is different. And having, that self-awareness of what you want to get out of that exit. And it's not always making the most money. It can be impact. It could be taking care of the people who work for you or your family or other large organizations. It depends on, you really need to focus on what you want to get out of that exit.
Yeah.
And then preparing for it, recognizing that before you even go down the path of exit, there's a lot to do to get a business ready so that you can make that process as successful as possible. And the one thing that we talk about often on this show is the fact that the process of exiting for a business owner is a full-time job. So one of the best ways I recommend and my partners recommend for getting prepared for exit is to get your company in shape so that it can run without you, because you're
Yep.
going to be really busy making sure that you come out on the other side of that well. And there's just a lot of work in that process. So it is a full-time job. But I always start with it's the what's your why, Simon Sinek thing, like why are you exiting? What are you hoping to accomplish?
Yeah.
If you have that goal in mind, it makes every step of the process going forward so much clearer.
So there's a lot of questions there, but a lot of good thoughts. Let me try to think the three, right? So to me, one is who's put in their time or money into making this real? How are their interests and cares adequately serviced through whatever exit occurs? Definitely always top of mind, because with time and money and people have put their faith in where the buck stops here, so to speak. For me, they're all part of it, but I'm the ultimate curator and leader of it all. So that's top of mind for me. Number two is I never want to. I always want to think about succession planning, and I've preferred to have a co-founder from the beginning. But I'm motivated by impact towards the environment, and there's a deadline, right? Whereas some other businesses, there's a deadline for impact to matter, versus I could slowly grow revenue in a more smart and natural hockey stick way, but my impact might be too late. right? Because of what motivated our business versus like, oh, I've got this thing that'll just like make your life better, right? But it's not about a global problem. And so for me is the succession planning part is if I'm no longer the right person to lead or no longer makes sense for me personally to lead, that someone else can still have that same sense of urgency for both one, normal business success, but two is the origin story that we're trying to help the world with a new catalyzing $40 trillion of money that's actually sitting on the sidelines that could be positive financially and for the environment, that they have that same passion to drive that forward and even better than I did before. And then the last thing is that when people say, like, what's your exit strategy? I say, I don't think it's smart to think too much about it. Right? Whether I want to IPO or like who's my acquisition target or whatever. Like I need to get to the hockey stick to even prove we're worth anything. And they're like, yes, of course I think about it, but I shouldn't think more than like 1% of my mental capacity about it. Right? Because that's a distraction, right? Distraction from executing for our customers and in the now. And so I almost intentionally don't answer it because I think it's fool's gold.
Absolutely. No. And I like that idea of thinking about it, but not obsessing about it. You know, you need to be aware about it, of what the exit could be. You need to think about it, but that's it. Like move on. There's a lot that needs to get done before then. And I love how you summarize that. And that's a lot of work, but I think you have to start with that overarching summary of, okay, this is where we're going. This is how we hope to get there. And eventually there's going to be an exit, but a lot of possibilities. That is fantastic. Very fun. Okay, maybe I'll start adding this to the show. So one last question, and you've already been gracious enough to share where to find you, which we will make sure that's all in the show notes. What is a hard lesson that you've learned during this startup that you would love to share with other potential entrepreneurs so that they don't have to learn the lesson the hard way?
Having core values within every person, even if your team is like 6 versus 60,000, that when you hit a moment of pressure, that you need to fall back on them and like let's have our true core values that we've all agreed upon guide our mediation or resolution. And so we have core values, and they're customer first, art of the possible, trust your neighbor, think like an owner. But we're inconsistent on like ingraining them in ourselves. Right. And I've been in a lot of companies that have core values, and for most of them, they're just on a sheet of paper. Right. It's not actually ingrained. And the one company I worked for where it was ingrained in me was Salesforce. Every employee was taught in their interview process and on a semi-annual basis to cite the customer values, the company values, and talk in front of their peers what they mean to them personally. Right. And I think having that like culture eats strategy for breakfast, like that cliche is true all the time, but like remembering that even as a startup, and that when individuals like get stressed or feel like they're failing or they're not being appreciated or their ego gets too big or we can't come to the conclusion, is having some framework. And I think company values is the right one to fall back on. And like, when we all we're under sound mind, this is what we value the most. Use that to get through this moment.
Absolutely. Absolutely. I've been talking with Scott Ryan, CEO and founder of Investature. Scott, thank you so much for sharing. And we will definitely be keeping our eye on you and your company to see what happens in the future.
Thank you, Heather. It was a pleasure. Nice to meet you. And thank you to the Private Directors Association. We're not marketing for them, but they did introduce us to each other, and we're grateful for it. So thank you.
Thank you for listening to the Growth Plus Exit podcast, sponsored by Newport, a unique national business advisory firm. If you enjoy this show, be sure to share, like, and subscribe for future episodes.